Welcome to The Power of Tax Defense Attorneys, Tax Corner with Juda Gabaie.
Welcome to The Power of Tax Defense Attorneys, Tax Corner with Juda Gabaie. I'm your host, Evan Mack, and today's episode is Tax Liens and Levies, How to Protect Your Assets from the IRS. Welcome, Juda.
Hi, Evan. Thanks for having me on. How are you?
I'm well. Let's get right down to it. Federal tax lien and levy, like these terms sound super familiar, especially to the layman out there, but the impact could be vastly different. Can you kind of break down maybe the distinctions between a tax lien and a levy and explain in kind of like practical terms how each one directly affects a taxpayer's life?
Yeah. So a federal tax lien and levies are serious IRS enforcement action. And there's a huge distinction between those two. A federal tax lien is basically the government's legal claim against your property when you neglect to fail or pay a tax debt. It's a public record that asserts the government's rights, legal rights to your assets, and generally, it attaches to real property, and that's what I always tell my clients, individuals and businesses. A lien attaches to, real estate property. On the other hand, a federal tax levy is very different. A levy is an actual seizure of your property. A levy means that the IRS is taking your money, your property, your bank accounts, your wages, retirement funds. It could even be physical assets. So it's an immediate situation where it's an immediate enforcement, whereas a lien is not necessarily an immediate enforcement. So in simple terms, a lien is a claim, whereas a levy is a seizure.
Okay, so beyond the obvious debt, how deeply can a tax lien actually impact someone's financial world? Specifically, how might it like sabotage their credit score, disrupt their business operations, or slam the door on future financing opportunities?
So I'll tell you like this, a tax lien can affect in many ways. Besides an impact on the credit score, and that's really going to depend on the credit agency if they want to report that tax lien. But it's going to affect you in interest rates, in loan denials, right? And reduced credit limits. Banks may pull credit limits that you may already have, right? It may freeze the financing. It could damage a business reputation or an individual reputation. Biggest deal, it could affect you in future financing, right? Because they'll see a tax lien and creditors may not feel comfortable giving you a finance or lending money because of the tax lien on that individual or business. So it's a very big deal. It could definitely affect. But there's ways of trying to get creditors and financing companies to help you, even if there are tax liens, and we have dealt with that many times.
So Judah, what are the typical triggers that cause the IRS to escalate from, sending those notices to actually levying someone's assets? And like kind of like realistically, how quickly can this enforcement action actually happen if a taxpayer receives that notice? Because I think if you get something like that, it's immediate and you should, batten down the hatches and protect all your things. But how does that all work out?
Right. So generally what happens is, it escalates once you haven't gotten into a resolution, right? With the IRS, when you have a liability, you want to try to get into a resolution. If you don't get into a resolution, that's when the enforcement action is going to happen, right? The government generally sends you a whole bunch of notices before an enforcement action happens. Usually they send you CP14, CP501, 503, 504. And when you don't make any resolution, that's when they'll start trying to go ahead and take enforcement action. And they can do that even if you didn't file a tax return, because even if you failed to file a tax return and you filed you didn't file any return, they could file an estimate for you, and then they can start those enforcement action. So they can start sending you those notices relatively very quickly. Once you start filing that return, or if you didn't file a return, they can start doing it.
Wow. When the IRS issues that levy, what specific types of property or income are legally within their reach? Are there any surprising categories we don't know about, or things that are more vulnerable to other people?
Right. So the IRS levy power is very broad and can pretty much reach almost any property or right to a property you have an interest in, right?
Wow.
As we discussed, they can touch wages, salary, they can touch bank accounts, they can touch retirement accounts, they can even touch account receivable. Let's say somebody owes you money, right? Let's say you're an insurance broker, right? Or you're a realtor, or you're a trucker, and your company, and you're a 1099, and your company is supposed to pay you money. The IRS can go to those employers or to those independent contractors. They can say, hey, look, this taxpayer owes us money. Please send the funds to us. They can even go after rental incomes, commissions, like we talked about, state tax refunds. So some stuff that people might not realize is that they could also go after the cash loan value of a life insurance, property held by third parties, dividends, royalty, vehicles, which is very rare, but they can do that. And obviously the most common one is, real estate and social security. Those are stuff that they can actually go after. So that's something that, a lot of taxpayers are surprised when it does happen. But the basics is always from wages, levies, bank accounts, and then it extends from there.
So Judah, they can't take like this water bottle from me. Could they come in here and take this water bottle?
Yeah, they can, generally they're looking for, stuff that they could use to pay off the debt. And from my experience, they'll go after real estate. And if you have any, vehicles and stuff like that, boats or registered vehicles, they can go after those too. But they generally like to start with the easier items first, which is like wages, salaries, bank accounts. Those are the easier items that they want to go after first.
When a client comes to you and they're facing a tax lien or active levy, what's your initial approach to the case? What concrete options do they typically have for safeguarding those assets?
So one of the first things that we do is, we want them to fill out a financial to disclose their income, their expenses, their assets, so we know how to protect them.
Right.
If there's an active levy, right, whether it's a wage garnishment or a bank account, the absolute priority is to try to stop it, right? And this usually involves requesting a levy release, requesting a collection due process hearing, which is a CDP, or entering into a resolution. We'll have to take a look and see what resolution they qualify for. There's various resolutions. There's the payment plan, there's settlement, which is known as an offering compromise. There's a currently not collectible status. So there are options, and we're trying obviously to find out, what's the best option for the taxpayer, and what can we do immediately to stop this levy. Like for example, we have a client of ours that reached out to us yesterday, and the IRS is levying the pension. And when they're taking the pension, they're taking, about $1,000 every month, right? So that's something that we're going to have them fill out a financial, so we have an idea. Okay, what can we do to stop this levy? What does the taxpayer qualify for? So that's you have to do this comprehensive assessment to verify the debt. You want to analyze the financial situation, and then also at the same time understand the IRS position and see where they stand. And then at that point, okay, what resolution needs to be done? And then we'll go from there. But right away, we try to move as quickly as possible.
So is it possible to remove the lien from the public record or reverse this active levy? If so, what does that process involve?
So there's a big difference. Removing a lien generally tends to be very difficult. The way you remove a lien, it's paid in full, right, or until the statute of limitation passes, right? Generally, when the IRS files a lien, they don't want to get it removed. However, there are conditions and exceptions where they'll remove the lien if it's in the best interest of the taxpayer and or the government, right? And a typical example could be, if the lien stays on the taxpayer's name, it could affect their job, a security clearance, or the potential of, they can refinance their house and use money from their house, from the equity, to pay off the government. That could be an option where they can ask the government for a conditional lien withdrawal, right? A levy is very different, right? A levy is where you're asking the government, hey, look, we can't have this levy to continue on their wages, bank account, or whatever other properties they may have. And then we're asking to get into a resolution where the taxpayer will go ahead and either do a payment plan, a settlement, or a hardship status. And we hope that the government will be open to releasing the levy. So it's two different things, levy and a lien. A levy is easier to sometimes get released, whereas a lien is much more difficult because once the government files it, they generally tend not to remove it unless exceptions apply and stuff like that.
And lastly, what's your top advice for taxpayers who want to stay away from the IRS asset seizures in the first place?
Right. Obviously, my main advice is never ignore those IRS notices, right? Always try to be proactive and not reactive, right? You got to play defense and offense. I get approached by a lot of taxpayers that they have totally ignored the IRS. They haven't played defense or offense. They haven't done anything. And now that the IRS has finally caught their attention by levying or putting a lien on them, that's when they realize, hey, I have to take care of this situation. So one of the most important advice is, try to be proactive on this. Seek professional help early. And if you feel overwhelmed, let the professionals deal with it, so they can get you resolved much more quickly and much more efficiently and not have to worry about these enforcement actions. So it's very important. The goal is to maintain communication with the IRS, show a willingness to resolve the issue. The proactive approach is the best shield against liens and levies.
Judah, sir, thank you so much for getting this information on the liens and levies and wading through everything.
Yeah, it's a lot. Liens and levies are the most common things that the IRS does, and I can't stress it enough. I always tell my clients, proactive is the best shield against them.
Thank you all for listening to the Power of Tax Defense Attorneys Tax Corner with Juda Gabaie. To connect with Judah, visit reliabletaxattorney.com. And remember to leave us a comment, like, subscribe, and review wherever you listen to the podcast. We love to hear from you. Thank you so much.
Thanks for watching. Be sure to hit that like and subscribe button and leave us a review in the comments.